Starting and managing a business comes with many decisions, and choosing the right entity structure is one of the most crucial. Among these choices, limited liability companies known as LLCs are by far the most popular for small businesses. But what exactly are the tax benefits of an LLC, and how can they help you save money? In this guide, we'll break down everything that you need to know about LLC taxes in simple and clear terms. What is an LLC and how does it relate to taxes? Before diving into tax benefits, let's clarify what an LLC is. An LLC is a legal business entity that protects its owners or members from personal liability in the event of lawsuits or debts. This means that if your business encounters financial trouble or legal challenges, your personal assets, such as your home or car, are shielded from liability, a feature that makes LLCs attractive to entrepreneurs. From a tax perspective, an LLC isn't a distinct tax entity. Instead, it defaults to being taxed as either a sole proprietorship for single-member LLCs or a partnership for multi-member LLCs. This means that the IRS doesn't recognize the LLC itself as an entity for tax purposes. Instead, the profits and losses of the businesses are passed through to the owner's personal tax returns. Beyond this default structure, LLCs can elect to be taxed as S-corporation or even a C-corporation, adding flexibility for business owners to tailor their tax strategy. However, it's essential to note that LLCs are not magical tax loopholes. They don't allow you to evade taxes or avoid your obligations to the IRS. What LLCs do provide are several distinct tax advantages that can make them highly attractive for small business owners. These benefits range from reduced administrative burdens to specific deductions that can significantly lower your tax liability. Tax benefit number one, pass-through taxation. One of the most significant tax benefits of an LLC is pass-through taxation, a feature that simplifies the tax process and often results in lower overall tax obligations. Understanding pass-through taxation. Pass-through taxation means that the income your LLC earns is reported directly on your personal tax return. The LLC itself does not pay federal income taxes, eliminating the need for a separate corporate tax filing. Instead, all profit or losses pass through to the owners. This is quite the opposite to the double taxation system imposed on C corporations, where income is taxed twice, first at the corporate level and then again when distributed to shareholders as dividends. Imagine you own an LLC that generates $100,000 in profit. With pass-through taxation, you report this income on your personal tax return and pay taxes based on your individual tax rate. Let's say your tax rate is 25%. In this case, you'd pay $25,000 in taxes. Compare this to a C corporation earning the same amount. This corporation might first pay a 20% corporate tax, reducing the income to $80,000. If you then take $50,000 as a salary or a dividend, you'd pay additional personal taxes on that amount. By the end, the total tax burden could easily exceed $30,000. For small business owners, avoiding this double taxation can translate into thousands of dollars in savings. Why this matters? Pass-through taxation doesn't just save money. It also simplifies the tax process. You're dealing with a single layer of taxation, which reduces the complexity and cost of tax preparation. This simplicity is particularly valuable for new entrepreneurs or small business owners managing their own finances. Tax benefit number two, S-corporation election. Another powerful tax benefit of LLCs is the ability to elect S-corporation status for tax purposes. While the default taxation structure of an LLC offers simplicity, opting for S-corp status can further reduce your tax burden under the right circumstances. The basics of S-corporation taxation. An S-corp election allows LLC owners to pay themselves a salary, which is subject to payroll taxes, while the remaining profits are distributed as dividends. Dividends are not subject to self-employment taxes, which can significantly reduce your overall tax liability. However, the IRS requires you to pay yourself a reasonable salary for the work you perform, and this salary is subject to Social Security and in Medicare taxes. For example, let's say your LLC earns $150,000 in profit. If you elect S-corp status and pay yourself a $70,000 salary, you'd pay payroll taxes on that amount. The remaining $80,000 distributed as dividends would not be subject to self-employment taxes, potentially saving you thousands of dollars. This strategy works best for businesses that generate income well beyond what the owner would reasonably earn as a salary. Is it right for you? While the S-corp election offers clear advantages, it's not for everyone. It requires more administrative work, including running payroll and filing additional tax forms. Consulting a tax professional can help you weigh the pros and cons and determine if this option aligns with your business goals. Tools like RCReports can simplify the process by helping you determine a reasonable salary for your S-corp, making compliance with the IRS requirements even easier. Now, if you want to get started with RCReports, then click the link down in the description below to get started. When you click on that link, it'll bring you to this page right here where you can go ahead and save $50 on your reasonable compensation report today. Again, just click the link down in the description to get started. Tax benefit number 3, tax write-offs. LLCs provide an excellent framework for writing off business expenses, a benefit that directly reduces your taxable income and overall tax burden. What are tax write-offs? So tax write-offs are expenses that the IRS allows you to deduct from your business income, effectively lowering the amount of income that's subject to taxation. For LLCs, these deductions can cover a wide range of business-related costs, making them a valuable tool for small business owners. Examples of deductible expenses. So consider the following examples of common deductions. Home office expenses. If you work from home, you can deduct a portion of your rent or mortgage, utilities, and internet costs. Business travel. Expenses related to flights, hotels, meals, and transportation during work trips are often deductible. Office supplies and equipment. Items like computers, printers, and even pens can be written off. By keeping your business finances separate from your personal finances, a requirement for LLCs, you simplify the process of tracking these expenses. Using bookkeeping software like QuickBooks can help you categorize and monitor your expenses, ensuring that you take full advantage of available deductions. If you want to get started with QuickBooks, we'll have a link for them down in the description below where you can go ahead and save 30% on a 6-month plan. The impact on your taxes. Let's say your LLC earns $100,000 in revenue, but you have $30,000 in deductible expenses. By writing off these costs, your taxable income drops to $70,000. If your tax rate is 25%, this reduction saves you $7,500 in taxes, a substantial amount for any small business. Tax benefit number 4, pass-through tax deduction. One of the newer and most impactful tax benefits for LLC is the 20% pass-through tax deduction, introduced by the Tax Cuts and Jobs Act. How the deduction works. This deduction allows eligible pass-through entities, including LLCs, to deduct up to 20% of their qualified business income from their taxable income. For instance, if your LLC reports $100,000 in income, the deduction reduces your taxable income to $80,000. At a 25% tax rate, this equates to $5,000 in savings. Are there limitations? Not all businesses qualify for this deduction. Certain high-income earners and businesses in specific fields, such as law and accounting, may face restrictions. Additionally, the deduction has several complex rules, including limitations based on wages paid and property owned by the business. Working with a tax professional can help you navigate these rules and maximize your savings. Tax benefit number 5, ease of setting up and maintaining an LLC. Beyond tax savings, LLC offer practical advantages that make them an appealing choice for small business owners. Simple setup and compliance. Forming an LLC is straightforward and typically requires less paperwork and record keeping than other entity types. Unlike corporations, LLC don't require you to issue stock or hold annual shareholder meetings. These reduced compliance requirements save time and money, allowing you to focus on running your business. Now, if you're ready to form your LLC, then you're going to want to check out Tailor Brands for expert assistance. By using our link, you can go ahead and get 35% discount to make the process even easier and more affordable. Tailor Brands can even help you on the branding side of things, helping you come up with logos, social media posts, and even getting started with a website. So go ahead and click the link down in the description to get 35% off your order with Tailor Brands. Stress-free tax filing. Filing taxes as an LLC is often less stressful, especially when compared to corporations. With fewer layers of taxation and simpler reporting requirements, LLCs streamline the process of preparing and submitting your tax returns. For new entrepreneurs, this ease of use can be a significant advantage. Debunking the myth. LLC LLCs are not tax loopholes. Despite what some might believe, LLC are not tools for evading taxes. They are legitimate legal entities that provide specific advantages, but they come with the same responsibility to pay taxes as any other business structure. By using LLCs effectively, you can optimize your tax strategy without crossing any legal boundaries. Are LLCs right for you? So LLCs offer several compelling tax benefits. Pass-through taxation to avoid double taxation, the option to elect S-corp status for additional savings, opportunities to deduct a wide range of business expenses, and eligibility for the 20% pass-through deduction. Also, a straightforward setup process that reduces compliance headaches. Now, if you're considering forming an LLC or optimizing your existing LLC tax strategy, then consulting a CPA or tax professional can help you make informed decisions tailored to your unique situation. By taking advantage of the tax benefits of an LLC, you can maximize your savings and focus on growing your business. Now, I hope that this guide helps demystify LLC taxes and shows you how they can be a valuable tool for small business owners. Now, if you have any questions or you want to learn more, go ahead and drop your comment down below. And if you want to get started with any of the products that we talked about today, you'll find links for them down in the description below. And these are affiliate links, which means that we earn a small commission when you use them at no extra cost to you. So if you end up using those links, we thank you so much in advance. But other than that, thank you so much for watching. We'll see you here in the next video.